Shree Renuka Sugars joining in on the show right now to talk about exactly this. Atul, hi, morning. Welcome to the show. Atul, how is it that you're assessing the supply disruption in Brazil, lower production in Thailand, and how do you expect global prices to remain elevated even as Brazil's harvest normalizes?
The gentleman who was speaking before me or analyzing the situation, he has practically covered everything. But let's face one fact that India is a very big swing factor as far as the world sugar markets are concerned. Because we are not only a very big producer of sugar, but also probably the biggest consumer of sugar. So anything which happens in India has repercussions across the world. And coupled with this, Brazil production is normal at around 40 million tons, but Europe is showing signs of stress. Europe production could actually be down by about anywhere between 2 to 2.5 million tons. Thailand is also down by about 2.5 million tons. And Indian El Nino talk and all that, and the rains being a lot patchy than for comfort. So our take is that internationally sugar prices from a level of comfort now are probably showing a deficit of anywhere between 2.5 to 3 million tons. So that is getting reflected on the values. And as far as India is concerned, India was in any case struggling with low stocks. And our production last year, or rather the season which ended in 25-26 season, our actual sugar production plummeted below 28 million tons. And with diversion to ethanol of about closer to 3 million tons. So overall sucrose production in the country was about 31 million tons, much lower than what was initially estimated. So all these factors are having a bearing on the current prices, which have, and to add to this, the silver lining, I would say, is that our Prime Minister has been talking about reducing sugar consumption, edible oil consumption, and salt consumption. So this would probably, higher prices might actually bring down consumption levels, which is a silver lining to all this bull run happening in sugar. Yep.
Morning. The current domestic prices, which have seen some rise in the last a month or so, do you think that reflects the structural supply shortage, or is it a temporary, festive demand which is leading to that increase in prices?
Now, I would probably say this is a structural shortage which is anticipated. In fact, the comfort level as far as government functionaries or government decision makers is concerned is close to about 6 million tons of carry-out stock. But this year, as per trade, the carry-out might actually be closer to about 3.5 million tons as of 1st of October. And with crushing season getting delayed and likely to be in early part of November after the Diwali, so there is some what of a feeling that during the peak crushing season, peak festival season, prices could spark. And that is what is the spike, what we are seeing as of today, is a reflection of that. But having said that, the government has come up with a lot of actions to ensure that the sugar availability is improved. In fact, they've come up with stock controls, and bulk consumers need to consume within 10-15 days and things like that. So all those things I'm sure are going to have a salutary effect in the markets. And the other thing is that the big buyers or the big consumers like the confectionery makers or the beverage makers like Coke and Pepsi and all, they are smart enough. They would not like to buy at these high elevated levels. So they might actually defer their purchases. So all these things should probably make the prices a lot more comfortable. Maybe not, they may not come down too much, but the going up might actually get arrested at these levels.
And how do you think, what would be the price range where sugar will finally, stabilize? And at what price do you see profitability, materially improving for all the sugar players like yours?
No, what we are seeing is now there are a lot of talk of government allowing imports of sugar. It's all over in the newspapers and in the press. So if that happens, the landed cost of imported whites would be closer to about 56, 57 rupees a kilo. So that would provide the cap, upside cap as far as sugar is concerned. But to come to your next question in terms of profitability of sugar companies, if the prices remain elevated, I think the profitability should marginally improve. But the flip side is that next year, the distilleries attached to the sugar factories might suffer big time because diversion towards ethanol, cane juice diversion towards ethanol, I'm sure it's going to be a casualty because at the current price levels of ethanol, which government is giving, which is about closer to about 65 rupees a liter for cane juice, which translates to about something like 37 rupees a kilo of sugar. I don't think any mill would be bidding for cane juice ethanol. So that should improve the sugar availability, but it would also mean that the investment will remain idle.
So if I could just get numbers in here, Atul, tell me what's your current inventory position versus normal seasonal levels, and how much of your current inventory is available to be monetized at the current prices?
This year, the inventory level as far as the sugar sector is concerned is not all that great because last year, in any case, the production was lower at around closer to 28 million tons, or slightly marginally lower than that. So obviously, with about 2.2 million or 2.3 million tons of consumption every month, so inventory level across the country is relatively reduced. And that is the reason we are seeing that in 1st of October, effective 1st of October, the inventory level for the country could be closer to about 3.5 million tons, which is obviously that is reflected in whatever is the situation in mill-wise. I don't think the inventory levels are too high.
Atul, the government had allowed some export quota as well, but there wasn't much of a participation in that at that point in time. Do you think the government may open some bit of that quota again here, because they attempted one and there wasn't much of a bids which came in?
No, I think the government has already burnt their fingers. In fact, initially when the quota was released of something like 1.5 million tons, which was subsequently enhanced to about 2 million tons, not much export was happening because the world was actually in surplus at that point of time and exports didn't make sense. But once the rupee started weakening and export parities emerged, about on a rough basis, about 800,000 tons of sugar actually went out of the country. And that is what is now proving to be burdensome. I don't think the government is in any case thinking in terms of opening sugar exports, because with the kind of sugar values currently prevailing, I think sugar as far as export is concerned is ruled out. And next year's production with El Nino and patchy rains is still not hunky-dory.
And also, if you can give us a sense of the import duty which is there, do you think that will have some impact on companies?
I won't say that, because internationally the values have also gone up. The landed price of white sugar now would be, as I told you earlier, is going to be anywhere between 57 to 50, closer to about 56, 57 rupees a kilo. And if India comes into the market, it's a bullish signal for the world market. And in any case, as I told you right in the beginning, that India has a big swing factor. So world values are likely to go up. So that would ensure that the domestic values do not come down all that much. It might actually end up providing an upside cap as far as domestic sugar is concerned. And it might open up another window for ensuring that the availability improves in the country. So I don't think it's going to have any material effect on the profitability of the sugar companies.
Atul, what is your expectation from the forthcoming sugar season? Do you think it's going to be surplus there, or are we going to see a muted output coming out?
Difficult to hazard a guess, but till now, whatever we are seeing and whatever we are hearing in terms of the rains, looks like it might be just about what it was last year, or maybe marginally lower, because who knows what the yields would be, because this is an El Nino year and the rains have been very, very patchy. So we'll have to keep our fingers crossed. But in any case, it doesn't look like it's going to be a bumper sugar crop. So that would mean that the prices also may not come down too much. But only thing is that the sugar availability may marginally improve because the diversion of cane juice into ethanol, that might not happen. So last year, about close to 2.75 million tons was diverted towards ethanol. That might not happen this year because the sugar prices are elevated.
Interesting. Okay, Atul, always great chatting with you. Thank you so much for your time today.
Thank you. My pleasure. Thank you.